Well, essentially, we've opened Pandora's box because if you look at my generation, the Generation Xers and the baby boomers, the millennial generation is jumping into this hand over fist at a rate we've never seen before. And it doesn't matter what the powers that be do that now, they're not going to stop it. I mean, it's literally, you cannot stop this movement.
Physical silver and gold in your hands, personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Robert Kientz from Gold Silver Pros. Robert, thank you so much for joining us today.
Thanks for having me back on the show. I appreciate it.
Definitely. It's great to have you. And I'd like to get an update on this whole silver squeeze. You've been reporting on this a lot. Some people are saying, it failed. It was a failed squeeze. You're reporting on that it's still strong, and we're seeing metal being taken off the exchanges. Mints are experiencing huge demand for physical silver. Can you expand on why you still say that silver squeeze is still strong?
Yeah, it depends on how you define the silver squeeze. So I think some people, the way they define it, I don't necessarily agree with. For example, they would say, well, they were trying to squeeze the SLV, which is a ETF fund, and you can't do it because the SLV prospectus doesn't allow you to squeeze because only authorized participants, redeeming a certain basket of shares can get the metal off, and that's exactly correct. So when the silver squeeze movement was first getting started late January, early February, I said, I was one of the first to report, hey, don't go to SLV and try to squeeze them. You can't. Because the prospectus is written as such that it's a derivative investment. They don't have to guarantee that they even have the silver. They don't have to guarantee that the silver is all the same quality or anything like that. So, you can't squeeze a fund like the SLV. It's not designed to be where you can redeem your share for an ounce of silver, and they don't even have to guarantee the silver's there. And that's why you see it, the price of the SLV trading, at a different rate than the actual price of silver is because you can discount it depending upon, whether they actually have the silver or not. And then people are like, well, can we go to the futures market? And I had a lot of subscribers coming to me saying, hey, can we set up like a fund to go to the COMEX futures market here in the US and stand for delivery and pull it off? And I said, sure, you can. But I said, the exchange controls the rules around how much silver you can pull off. So there are a lot of rules on the COMEX exchange where, they can force you to settle for cash, or you can roll your position, or there's no guarantee that if you stand for delivery in the futures exchange that you're going to pull that silver off. Now, of course, that hasn't stopped people from pulling silver off the exchange. I'm going to go to the COMEX data. I'm looking at the CME physical delivery report, and I'm looking at March silver futures. And so far this month, on a fairly small silver month, we've had, as of 324 data, so that would be yesterday, there have been 11,144 contracts of 5,000 ounce silver physically delivered off the COMEX in a fairly thin month. So if I add those numbers up, if I do 11,144 times 5,000 ounces of silver, that's 56 million ounces of silver that's come off the COMEX and wasn't expected to be, a huge month. That's not historically a huge month. That's a lot of silver to come off an American exchange in which most of the trading is futures, it's paper. So are people pulling silver off of the futures exchange? Sure. Now, the COMEX is not bankrupt of silver. They still have silver to deliver. JP Morgan probably has the single biggest amount of silver that could be delivered on a physical silver that could be delivered on a contract. They've got, over 100 million ounces, and there are other banks that have it there as well. But the other part of that story is that contrary to what we saw from 2000 to 2020 on the COMEX, 2000 to 2020, people would take delivery, quote unquote, of silver off of COMEX, and they would stick it in the vault and leave it there. And that's called eligible. Eligible is private storage. It's not for trading. It has nothing whatsoever to do with the actual trade market. And people would just pile silver, and they do gold too. They pile silver and gold sitting in that vault, and they wouldn't necessarily put it back up for trade. And so you built these huge balances of vaulted gold and silver on the COMEX but it wasn't making its way back to the futures market to make liquidity. And around April 19th of 2020, Ronan Manley of Bullion Star reported this, and then I picked up on it after him. The CME Group said, hey, we don't know how much of that eligible vaulted gold and silver is actually liquid, so we're going to discount it by 50%, but in reality, it could be a lot more than that. So that was an admission that gold and silver were being taken off of the exchanges and just being vaulted there at COMEX, but it's held in private hands. And then this year, for the first time we've seen in a long time, millions of ounces have come out of the COMEX and stayed out of the COMEX. So you really have two levels. You have silver up for trade, that's the registered category. You have silver vaulted private transactions, which is not for trade. And then you have silver coming completely off the exchange. Over the 2000 to 2020 timeframe, that 20 years, most of the silver delivered stayed in vault and didn't go back for delivery. Now it's actually being pulled out of the vaults. That's the change in 2021. They pulled millions of ounces out of the vaults. And this data is freely available on the CME Group's website. I'm not the only one that's covered it. Rafi Farber at Seeking Alpha has covered it. Lots of other analysts have covered it. I want to give Rafi credit here, though, because he's one of the first to cover silver coming off the COMEX. Of course, we covered on our channel as well. So that's the difference. So people are taking COMEX, not only they're taking it off of the liquid futures, but they're taking it all out of the COMEX vaults. And the question is, where is it going and who is it? And we don't know because the CME Group doesn't report that data. But when you see millions of, well, for 20 years, silver sitting there and all of a sudden millions of ounces come off, first it's piling up and now it's coming out. That tells me that people are pulling silver out for industrial use, for investment use. And then the third leg of that stool is you look at the retail market. You've got massive premiums in the retail market because there's no liquidity. I mean, try finding an American Silver Eagle, a 2021 issue, you're not going to find it. Try finding, a recent issue that's not $8 to $10 over spot. Same thing for gold. We're seeing premiums on like gold American Eagles, $160, $180 an ounce, which in my 12 years covering the sector, I've never seen that before. So there is scarcity of metal on the retail exchange. Now add to that the fourth step is that we're starting to see the Perth Mint supposedly not honoring their delivery, people standing for physical delivery off the Perth Mint. And now we've got another report in Australia of a group called ABC Bullion, which is also not delivering metal for clients that have held their metal with them for 10 plus years. So if we had all this liquidity and the silver squeeze wasn't working, why would we see all of these issues? People grasping for silver and taking it off the market, or people not able to deliver on contracted silver. And so I think the silver squeeze is still going. And I'll add one more piece to that. It's a really long-winded answer, but there's a lot to it. I've been having interviews with the founder of Wall Street Silver, and I've been on that Reddit channel. And that movement of the younger crowd, the millennials, going into silver is going absolutely bonkers. And that has not subsided, it's grown. That group has thousands of subscribers. People from around the world and the younger generations have caught on to silver and the value of silver, and they're buying it hand over fist. And, anybody who says the silver squeeze didn't work is not really paying attention, in my opinion.
No, there are a couple things I'd like you to expand on there. One of the things you mentioned is really what we're seeing now that we haven't seen before is people are taking delivery of silver and taking it off of the exchange in really a new way. What do you think the long-term effects of that will be?
Well, the long-term effects is it's the emperor with no clothes, because the COMEX could always say we have all this vaulted silver and we think a large part of it could come back into the liquid exchange, where you're actually putting a warrant on it and saying, I will deliver that on a futures contract. Because remember, you got two categories of silver on COMEX, eligible and registered. Well, now it's being drained off eligible people. I don't know if they're worried about the exchange taking that silver and gold, or if they just need it. But there's such demand that it's being drained off of the exchanges. We haven't seen that in 20 years. It's a 20-year reversal trend in silver. I don't know how you minimize the importance of that. 20-year trends are powerful trends.
And also one of the things that is kind of a complete shift is we're seeing a lot of young people coming into this, as you mentioned, like the next generation. So, that has mainly been before this, Bitcoin and cryptocurrencies, young people getting into those alternative currencies. But I guess still on this theme of like, what is the long-term effect of this? What is the long-term effect of young people now getting into the silver market?
Well, essentially, we've opened Pandora's box, because if you look at my generation, the Generation Xers and the baby boomers, there have been a certain percentage of us, about 1%, that have invested in gold and silver over time. The millennial generation is jumping into this hand over fist at a rate we've never seen before. And the way that they absorb information through social media, through apps, spreads information so quickly. So this movement has spread so quickly. They have thousands of subscribers on their Reddit channel that basically came out of nowhere this year. I mean, it would have taken years for people like me to build up that kind of subscribership over social media. So their use of social media, the way that they network, you can't stop it. I don't care what CNBC, Reuters, or Bloomberg prints about the precious metals. You are not stopping this generation. You're not stopping them. I did a report for O&M 4 or 5 months ago where I talked about how you market to millennials. And they don't follow Reuters and Bloomberg. They don't care about that mainstream media. That's not where they get their news. It's a fact that they get it from apps. They follow what's trending. And they're very independent when they invest. They don't go to their banker and say, invest my money. They figure out how they want to invest based upon educating themselves, based upon what their friends are doing, and based on social causes. That's the difference here. The SilverSqueeze movement is a social cause. And the millennial generation, 85% of their investment goes into social causes. If there's not a social cause, they don't invest. And this is a fact. There were studies done by Gen Connect U, which did surveys of millennials. So you're seeing a movement and you're seeing a strength to this that we have not seen in previous generations. And it doesn't matter what the powers that be do that now, they're not going to stop it. I mean, it's literally, you cannot stop this movement.
I think that's a good point, because you say there's a cause behind it. And I think that probably has a big impact on this whole SilverSqueeze thing is there's this narrative, there's this story behind why to invest in silver, why to purchase silver, why to take hold of physical silver and take it off of, take physical possession of it. That narrative is really important, I think.
Yeah, and that narrative is born on an awakening of people. You know, this generation is the first that's facing the facts that they could have a worse lifestyle than their parents for the first time, and that we can remember in American history. American history has always been, we build upon the last generation. You know, the millennial generation, 50% of college students aren't finding jobs in their fields. They're having to be very inventive with how, you know, they build their careers. So the challenges with getting jobs, all of the money printing that goes on by the central banks, you know, the shutdowns last year. The shutdowns last year probably woke up more people to the fact that they need to save in safe investments, and they need to make alternative financial arrangements, probably in 1 year than we saw in the past 20 years. And this movement is a realization by people that, hey, our generation doesn't have the same advantages as our parents, so we have to scrap, and we have to be smart, and we have to educate, and we have to find ways to save value. And the reason it started in silver, and I eventually think it will go into gold. I don't think we're going to leave gold out of this. The reason it went into silver is because silver is compelling because of the industrial argument, but it's also more affordable to that generation. They can get into silver much easier than they can get into gold. But I do think this is going to extend to gold as well, because we have silver shortages. So what comes next? What's the next precious metal? It's going to be gold. So I think you're going to see people move into gold as well.
Speaking of that, I know you've been very bullish on gold recently. Some people looking at a technical level are bearish. What is your response to that? Why are you bullish right now?
You know, I completely understand that. I spend a lot of my time doing technical analysis on gold and silver. And people who watch my videos will know I'll pull up a stock chart, you know, stockcharts.com. And I've got all my trend lines drawn, and I'll sit there and do technical analysis. And I get the argument, because gold went up to about 2060, 2070, and it came back down to the high 1600s. However, if you look at the long-term technical analysis, this is actually a bullish pattern. And the reason is because there's something called cup and handle pattern, which is a very powerful technical formation in stocks and whatever chart you're looking at. This formed over the last 10 years, dating back to the last high of 1900 and for gold in 2011. And the handle is the retracement back down from 2000 to 1700. That is a normal correction in this type of technical pattern. And that's a consolidation pattern. And you can see it in the volume charts. It is a classical consolidation move that is predicting the next leg up of the bull cycle. And so from a technical perspective, gold's doing what we expected it to do. At my conference last year in August, I had two guests on, Florian Gourmet of Midas Touch and also a Wealth Research Group. And they both said, we expect gold to retrace and then start its next bull leg. And we called that back in August, and it's done exactly what we said it would. It's following historical patterns. So technically, it does not surprise me we've had a retracement. The fundamental reasons why you want to own gold in that period of time have not changed. In fact, they've gotten stronger. You've got a $1.9 trillion stimulus package that got signed into law by the new administration. Now they're talking about a longer-term $3 to $4 trillion package. The spending is going through the roof. We've got the Fed talking about yield curve control. You've got U.S. bond rates hitting 1.7% on the 10-year and the 30-year going well over 2%. You're starting to see signs of inflation in the economy. You've got the Fed talking about inflation. So every single reason in which you would expect gold to be strong has gotten more pronounced. So I think this next leg of the bull market in gold is going to be fantastic to watch, because you've had this consolidation, you've had people taking profits. And then when we have the next debt crisis or the next monetary crisis, that gold price is just going to run and you're not going to be able to control it.
So you mentioned before about how young people are getting into silver, right? And part of that drive is that this whole, last year of 2020, there's a lot of uncertainty, and they're like, wait a second, we have to be kind of creative. What are the assets that actually hold value over time that are safer, right? So yes, that would also be an argument for gold, right? So are you seeing that same kind of thing, young people moving into gold as well?
Yeah, there was a period of time last year when on the Robinhood app, gold was in the top 10 investments, and Zero Hedge had an article on this. Young people are getting into gold as well. Gold is a bigger market than silver, so it's a little bit harder one if you're going to run a squeeze movement on it. Most of the gold ever mined is still above ground. There's some industrial usage, but most of it is still an investable form like jewelry or coins or bars. So gold is a little bit of a longer term play. So you're not going to see that shorter term squeeze action in gold. However, yes, I do think gold is the classical crisis hedge. It always has been. It's also been money. You have the gold standard. So I do think that there's going to be a movement into gold too. And I think what you're going to see is when the wealthy investors, especially in the younger generations, because there are wealthy millennials, when they decide to move in, silver doesn't have the liquidity you need. When the wealthy move in, they're going to go to gold. So the early movement in silver is much a retail movement. The movement of gold is going to be big money. It's going to be hedge funds. It's going to be pension funds. It's going to be wealthy individuals, family offices. And I think you're going to see that. And I think it's going to happen in a big way.
Do you anticipate that happening this year, or what is the time frame on that?
Yeah, it's really hard to call timeframes. I just actually had an interview with Wall Street Silver a couple hours ago, and they asked me the same question. And I said, it's not as much about timeframes as it is milestones. What the central banks are facing right now is they know that the dollar and the euro are basically toast, and the pound and all the fiat currencies, but they're trying to support each other. So it's just central banks helping central banks. Underneath the surface, you have China, Russia, and the BRIC nations dumping the dollar in international trade in favor of gold, the Iranian currencies, Chinese yuan, Russian rubles. So there's an undercurrent right now of dumping the dollar and dumping U.S. bonds. But the central banks don't want it to crash right now because they're developing, their Fed coins. The European Central Bank has copyrighted the term digital euro. The Fed has come out and said that they want to do a digital dollar. So they're going to move into the digital versions of the international currencies, but they're not ready yet. So I think what they're going to do, this whole discussion on yield curve control is to support that system until such time as they're ready to move into the digital currencies. So those are the milestones I'm looking at. I'm looking for their news announcements on, what, the dollar is no longer stable. When you see official institutions start to question the dollar and say, the dollar's not stable anymore. We need to look for an alternative. And by the way, we have the digital dollar. That's when that currency will finally collapse. And that's when you'll see the last big move up in the precious metals in currency terms and fiat terms. So I can't tell you exactly when that's going to happen, but I can tell you, look for the news flow. Those are the milestones. When you start to see them hype up these digital national currencies. That's when you know you're at the very last stage before the end of the dollar, the euro, the pound, the yuan, and so on and so forth.
All right. Well, Robert Kientz, we really appreciate your time today, and it'll be amazing to see, how this all plays out. And, like you're saying, yeah, there already are steps towards those digital currencies. And before we let you go, if our viewers are interested in hearing more of these interviews, they can hit the subscribe button, bell icon, so they'll be notified of all the new interviews we're doing. And if people would like to find you, where can they find you?
They can find us at goldsilverpros.com. We have a free daily newsletter that comes out for videos such as these. We also have a subscription service. If people are getting into gold and silver the first time, they want to learn more about it. We have a university service which teaches, and then we also have a monthly and a quarterly newsletter if you're interested.
Before we let you go, any last thoughts you'd like to add?
Last thoughts would be just continue to educate yourself, share the information with your friends and family. I think it's going to become very important that friends and family support each other with knowledge, with education, that we work together, and that we find solutions to problems. Governments can't solve every problem, especially when you have currency crisis. We're going to have to come up with our own solutions. So work together, build community, and I think you'll be okay.
Robert Kientz, once again, thank you so much for your time, and God bless.
Thank you very much for having me on the program.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.